And it all points toward triple digits and in some cases quadruple digit silver, which I don't think is going to happen. But I do think a 10 bagger from here, $300 silver, that is entirely possible. Hi, everyone. It's Mike Maloney and Alan Hibbard here once again. And Alan has more of the same for me, but different. So tell me what you got, Alan.
I have some more viewer comments and questions that I thought you'd appreciate, and so would our viewers. So first up is a follow-up on the topic of financial advisors and what they recommend that their clients have in gold. And you pointed out in a recent video that an overwhelming percentage of financial advisors basically recommend zero gold, no gold whatsoever. And a couple of our viewers made some nice comments here. The first is the public may never go in on gold because their financial advisor and the mainstream media will not recommend it. And relatedly, money management industry has been steering clients away from gold for far too long. Time to fire your advisor if they still carry this philosophy. What do you think, Mike?
I think that's a great idea. In fact, I think that people that have financial planners and advisors should start advising their advisors. Learn as much as you can about it. One of the things that I said in my previous video was that the best investment that you can make is in your own financial education. That's the most important thing. And so if you feel that you're starting to know more about it than your financial planner, financial advisor, either start educating them or fire them. Yes. But that's my own opinion. It's not financial advice. I don't give advice. I tell people what I do. But this chart, to me, shows that gold has a long way to run because nobody owns it yet. There's very few people that have any significant portion of their assets in gold. And when you look at where it was back in 1980 at the peak, it just sort of reiterates that the financial advisors will all start telling you to go for gold at the wrong time. This chart would have been like the 0 to 1%, meaning 0%, because nobody recommends 0.7%. Those columns would have been up close to 100% back in the year 2000 when gold was just $250 an ounce. Nobody, in fact, all of your advisors would have been telling you to stay away from it, that it's dangerous. The financial planners, they're usually doing something where they're selling you a product that they make a commission on. And so just because of that, and it's slow for them to figure out products where they can make a commission. There will come a day where they'll all be able to make a commission on some gold product or another. And as we go into a blow-off top, and it becomes easy for them to sell this idea to their clients, and their clients are, yeah, put me in gold. Well, that's exactly the wrong time. If you want a confirmation on that, watch the comedy Brewster's Millions, and John Candy brings in this financial advisor and John says, oh yeah, he's got me in collectibles and stamps and even in gold. And this is like, it was released in 1982 or 83 after the bull market was over with. This is when the bear market had started. And it is typical for financial planners and mass media. They do whatever sells commercial time on the big financial channels and so on.
Yeah, well, fortunately, viewers of our channel are going to be informed. They're going to make good decisions. I have faith.
We will try our best.
That's right. That's right. And speaking of, your latest book, Rick says, thanks, Mike. Amazon review completed. And so at your call in a recent video, you asked you asked folks to give a 5-star review, and Rick was kind enough to do that. I'm sure many others were as well. So this rating is getting closer and closer to 5 stars overall.
Thank you so much, Rick. I really appreciate it. Alan knows what kind of work went into this book, and it was a labor of love, but it was grueling.
Yes. But we turned out some really, really amazing things. So it was,
Of the 1-star reviews, almost all of them, one guy says there's nothing new in this book. I mean, the time we spent digging up brand new stuff and having Tim Burris dig so deeply. Cameron, the guy that used to put up the news on GoldSilver.com, Cameron Hamza, he would go, "Wow, I had to really go deep for that one," talking about deep into the internet, really digging to find stuff. And Tim Burris would find us the most obscure data sets and so on to be able to analyze and make these charts from. And it did contain a lot of new stuff. Another guy gave it a 1-star rating because there was no Kindle version. Well, the following week, the Kindle version came out. Another guy gave it a 1-star rating because he lived in New Zealand and the freight was high. Is that my fault? Those 1 stars are what keeps this book from being a 5-star. So, anyway.
We'll get there. We'll get there. Have faith.
Thanks, Rick. I really do appreciate it.
Yes, thank you, Rick. Our next topic is...
Hi, this is just a quick reminder. We're offering you free silver at goldsilver.com as a thank you for choosing us as your dealer. Just click the link below for details.
We got two questions here. This is about the gold-silver ratio. Jay Wagner says, good show. I'm buying more silver rather than gold. A 3-bagger on gold is great and probably safer, but I still believe a 10-bagger plus is probable for silver. Swap for gold soon, then after, game over. Game over emoji. And a second question here from the real shaman. Mike, I'd appreciate your perspective on whether long-term silver stackers should consider gold. With the gold-silver ratio so high, there is some reluctance to buy gold. Is there a case to be made here to ignore the ratio and diversify into some gold? I'm asking for myself, but probably a lot of other stackers as well. Thanks. Your thoughts, Mike?
When it doesn't seem like your plan was working out and you see other people and their plan is working out, the people that are just buying gold, you have to question yourself. But usually, I've found throughout my life, that's as soon as I go with the crowd and sort of alleviate my own fears by going with the crowd, that's when it comes back to bite me. And I should have just followed my plan. When I developed plans before I was writing, while I was writing my first book back in 2005, 6, and 7. And for the most part, I really stuck with them. When I diverged from those plans, like for instance, I did a study on the Barron's Gold Mining Index versus gold. So you've got the top tier gold miners in the world in that index. And from 1971, I believe, Alan, we found that gold, the physical metal that can't go bankrupt and have labor disputes and stock dilution and all of that kind of stuff, had outperformed the Barron's Gold Mining Index by a factor of 8. And so there really was no reason to go with it. I let the gold-silver ratio determine what I buy. And at 100 to 1 right now, it might go higher. And there are people saying that it's going to be this way permanently. The second that gold goes to a price where people go, wow, this was only $250 an ounce back in the year 2000. Maybe I should be buying silver instead. That's what caused silver to explode in the 1980s, is when gold got past a certain price and it seemed relatively expensive and silver was cheap. But the gold-silver ratio back then wasn't 100. It was like 50, and it went to 14. And so there was a tremendous outperformance by silver. And I've made the case, if you don't have my latest book, you should at least, it's only $9.99 for the Kindle version. And in there's a chapter on silver that explains if silver goes into the same type of bubble that it was in 1980 against the other asset classes in society, including the growth of the money supply, currency supply, the growth of the real estate, the stock market, bonds, I compare it against everything that I can think of. And it all points toward triple digits and in some cases quadruple digit silver, which I don't think is going to happen. But I do think a 10-bagger from here, $300 silver, that is entirely possible. But it takes monetary demand. It takes the public rushing in and switching from gold to their preference to silver. I think that'll happen. 3,000, we're already up to 3,500. It'll happen once the public comes charging in. They haven't. Nobody owns gold yet. and many, many fewer own silver. So,
yeah, I agree. Thank you for that. Another question from Mark. What about confiscation? Are you concerned at all about a modern version of Executive Order 6102? And if so, what are you doing about it?
okay, first of all, it wasn't a confiscation, it was a gold nationalization. They didn't take it from you, they bought it from you. But they bought it from you for $20.67, and then the following year, unpegged the dollar from gold and then repegged it. And over a 2-month period of doing that, the international exchange rates changed to where gold was $35 an ounce. At that point, it had made up for the fractional reserve scheme that the Federal Reserve was perpetrating on us, and it accounted for all the currency that had been created. And so they froze it at $35. There was no longer there was a 100% coverage for the currency that was out there. Also, gold was the monetary base, and it was in circulation as U.S. currency. This time, it is being freely traded. The price is not determined by, it's no longer $35 an ounce as determined by the Bretton Woods system. It's freely traded. And then there's all these huge institutions that if it was nationalized once again, it means like taking, GLD is one of the big, JP Morgan is one of the big custodians for GLD now. And so it means the U.S. government confiscating or nationalizing JP Morgan's, the GLD holdings and so on. I just don't think that they can do it this time. However, if a currency is dying, a country will probably do almost anything to protect that currency. So if we do go into some type of hyperinflation, at some point, you may want to try and front run something like this, but it's not going to happen unless there's this huge hyperinflation going on and gold is soaring to an infinite price against the dollar, and they've got to protect the dollar by nationalizing gold and controlling it once again, because gold is that canary in the coal mines. And if they do that, it's going to be at an astronomical price. And then you sell it and you get rid of your dollars and you buy something real right away. Real estate, high dividend yield stocks, just something else.
Yeah, makes sense to me. Awesome. Well, thank you everyone for your comments and questions. Thanks for watching. And Mike,
I've got one more thing to add. Sorry, Alan. The word confiscation is used by people that sell numismatic coins and other products that are very high profit margin items instead of bullion. So when you hear confiscation, that's usually somebody trying to scare you into a product that they can make a whole bunch of profit on versus looking out for your own financial future by selling you something. If you buy a numismatic coin where the dealer made 30% on it or 50% versus just a couple of percent, that means that gold has to go up by more than that amount for you to break even. And not everybody is going to be looking for numismatics in a rush. They're just going to want to buy gold. Numismatics have a premium on them beyond the dealer's profit. There's a big premium on the collectible value. It's a much smaller market. So when you hear the word confiscation instead of nationalization, that's usually a cue to make you check your pockets, and is your wallet still there, or have you been pickpocketed? That's my last comment.
Makes sense. Well, thank you again, Mike, so much. And thank you to all of our viewers for your wonderful comments and questions. Thanks, guys.
Hi, this is just a quick reminder. We're offering you free silver at GoldSilver.com as a thank you for choosing us as your dealer. Just click the link below for details.